The East Tennessee housing market is showing some interesting signals right now, so if you're thinking about buying or selling, you need to see this data. So first we'll take a look at the number of listings, also known as inventory level, and that is recovering, although sellers still hold a slight edge. When we look at June of last year, we had 7,409 listings on the market, and it goes through a little summer buildup there every year, and then in the fall starts declining. In October, at the end of summer, we hit 7,800 listings, and then we hit a low in February, and that was down to 6,567 listings. But then we started recovering, and now we are up to 7,552, which is a little bit above where we were in June of last year. So if we look down here at the number of listings, it was bouncing along pretty steady at 2,400, 2,500 in that ballpark, 2,600 there. It dropped down in December, and that's not unusual, of course, and then now it's picking back up. And we're back up to 3,200 there in April and 2,900 in May. Now we'll notice that there is a difference in the number of listings versus the number of sales. The number of sales have been recovering a little bit as well, and I think that's a little bit depressed because the interest rates have gone back up. And the interest rates go back down a little bit, I expect that the demand for housing will continue to pick back up. Now, we see that, as I say, there is the difference here between the number of new listings and the number of sales, so that's why we're getting the increase in the inventory level. So next we're going to take a look at absorption rate, and this is a measure of how quickly homes are selling. And in effect, what it means is if nothing new came on the market, this is how many months it would take to sell all the existing homes that are on the market. Now, as I mentioned, it is slightly favoring sellers at this point. So to see what effect this is having, let's take a look at the sold to list ratio. So we've got the two graphs on this chart. The top graph here is the sold to list ratio at the time the property goes under contract, and the bottom graph is the sold to list ratio from the time it goes under contract versus the original list price. So what this shows us here is June we were at 98% essentially, dropped down to about 97% there in January, and then we get over here to the current time frame of May and we're back up to 98%. So that is very strong. It's certainly not enough to push it into a seller's market, but it's strong. But we get a nice picture down here of the thinking on the listing side. Back in June of last year, the sold to original list price was 95%. And that kept dropping and dropping and dropping until we get down here to January. It's all the way down to 93. And then we're going back up, and we're back up to 95. So what this tells us here is that in this time frame, we were seeing that the sellers were doing multiple price reductions between the time they put it on the market and the time it actually sold. So from the previous chart there, let's go ahead and take a look at days on market, which correlates closely to the absorption rate. Again, back in June of last year, we were at 60 days on market from the time it was listed to the time it went under contract. And that started climbing, got all the way up to 87 days back in February. And now it's starting to come right back down. And in my opinion, the reason for this is the fact that if we take a look back at the sold to list ratio, people are pricing the property more realistically when they first come on the market. So it's not sitting and having to wait for price reductions before they finally get a buyer. So that brings us to the final chart of interest, and that is the actual listing prices. And we've got three graphs here. The top graph is the active listing price average, of course, and the middle is the new listing price average, and the bottom one is the average sold price. And again, we see that Knoxville is hanging pretty steady, but we are now on the upswing again. And that, I believe, indicates a little stronger demand coming into the spring here. We are currently up to just under $600,000 for the average list price. If we look back at June of last year, we were at just under 589,000. So it's bumped up a pretty fair amount in the last year. Now, the new listings are coming on. Back in June, they were coming on at 508,000, and they peaked out here at 554, and this last month they dropped down to 532. But now I will point out that the average list price for new listings is going to depend on the mix of properties that are coming on the market. Most homes are in the around 400,000 to 800,000 range. We have some homes that are sub 300,000, especially there's some townhomes under 300,000. And of course there's some older properties that are under 300,000. But by the same token, we have a lot of plus $1 million homes here in the Knoxville area. So in fact, a few plus $2 and $3 and $4 million homes. Those don't move quite as often, but they're there. So depends on the mix as to what the average new listing price is going to be. So I think the average price on market is a better indicator of what we're dealing with. But we will look also at the average sold price here. And back in March, it was 433.7, and now it is 474.6. So that's a pretty substantial increase. And that brings up the question of appreciation on new properties. Well, not on new properties, the question of appreciation on properties. So that brings up the next topic of the Knoxville market in general. It is still pretty strong. And in fact, if we look at the single-family home appreciation, we see that the average for the U.S. for the past year has been 1.7%, and Knoxville is at 3.3%, so just a hair shy of being double the national average. Now, it's not the strongest in the country by any stretch. Peoria, Illinois holds that honor at 9%. And Punta Gorda, Florida holds the Hall of Shame at minus 7.3%. So the other thing that surprised me when I did this research is New York City, Chicago, Detroit, they're all Boston, Miami, all of those are still very strong markets, greater than 4%. In the case of New York, 5.6%, Chicago 5.6%. That I find a little bit surprising. Even LA, 2.4%. Now we have a lot of people moving out of California, coming to Tennessee, Texas, and Florida, and that might help to explain Miami's good, strong showing there. And I think it probably has a good thing to do with Knoxville having a strong showing as well. But I'm surprised that the LA prices are still growing that much with so many people moving out. Seattle is another one that kind of surprised me at 1.8. Austin, Texas, minus 0.8, and San Francisco, minus 0.2. So we can see from this, even the weak areas of the country are not horrible at this point, with the exception of Punta Gorda. So that brings us to our conclusion. I'd like to close out here with a little look at an actual seller's market and an actual buyer's market. For the seller's market, we're going to go back to August of 2021. September 2021, we had 3,284 active listings, dropped all the way down to 2014 by April of 21, and then by August of 21, it was back up to 3,051. And of course, you see the number of sales are stronger back then as well, 2224 versus about 1,800 now. To reinforce that point, we'll look at absorption rate here. Now, I said that anything less than 4 was considered a seller's market, and you can see we started off at 1.9 back in September of 20, and it kept on coming down, and we got to a low of 1.07 in April of 2021, and then it came back up a little bit, back to 1.5, but that is definitely a seller's market. And to further illustrate that point, we'll take a look at the sold to list price ratio, and it's about 98.5 there, which is stronger than it is right now. And at the peak of the seller's market, it got all the way up to 101.2. So a lot of houses were selling for more than asking price. So that is what you get in a seller's market. And even in August, it dropped down to 100.3. So homes were getting multiple offers. There were a few little cases of bidding wars around the Knoxville area. And so our last look at the seller's market here is going to be days on market, and started off around 55 and just kept right on dropping and got down to 20.9 days on market. So again, and that's the other indication of a seller's market. Anything less than 30 days on market on average, you're in a seller's market. So the first thing we're going to look at on this buyer's market is the number of homes for sale. And we see in June of 2016, we had 9,048 homes for sale. And as the year wore on, the inventory level started coming down. And we get up to May of 2017, and we're at 7,230 homes for sale. Now, if we look at the number of new homes coming on market, it stayed right around 2,600 all the way through. You know, it bounced down a little bit here, down to 1,300. I hit the wrong chart there. New listings, 1,349. New listings and sold listings were virtually identical that month. Here in May, we're back up to 2,639 new listings, and the sold listings dropped down to 1,949, and it started out the year at 1,910. That was definitely a buyer's market. And we can see that also in the absorption rate, because started the year back in June of 16 at 6.34 months for the absorption rate, and even at the end of the year got down to 4.6. So we're down into balanced territory here, but I don't know if it had fully shifted to a balanced market by that point. In any case, that's what a buyer's market looks like in terms of inventory level and absorption rate. And days on market is another thing we'll take a look at along this same line. Bounced right around 107, I'd say average, call it 105 average there. But even here, where according to the absorption rate, it was a quote balanced market. If we look at days on market, we're over 90 days on market. I still consider that a buyer's market. So in looking to see if you're balanced or buyers or sellers, you got to consider everything together. And so lastly here on the buyer's market, we'll look at the sold to list price ratio. Started out 97% back in June of 16 and had managed to climb back up to 97.2% by May of 17. Still pretty weak, and the sold to original list price had dropped all the way down to 93%. So even though the sold to list price is, quote, relatively strong at 96, 97%, you see they were doing a lot of price reductions in the meantime, and that goes back to the days on market. So there you go. Price it right to begin with, and it will sell. So you need to understand what kind of market are you in. Take a look at the market analysis for your property before you list it, and price it right and get it sold. If you try to get too much money, it's going to sit on the market, and you're going to wind up having to come down to what the market will bear in any case, because that's the reason for the market analysis. Property is not going to bring more than people are willing to pay. So that's about the size of that. So one final thing I'd like to take a look at here is we discussed appreciation over the last year already, and Knoxville is in good shape when it comes to that. But let's take a look at a longer term. Here we're looking at essentially 10 years. So back in June of 2016, the average sold price was $203,000. So now if we look at the sales price in the 2020 range, we're looking at September of 2020, the average sold price was $290,000 compared to the $200,000 back in 2016. So that's about a 45% increase in price. It continued to go on up for the year and finished out August of 21 at $343,000. Of course, this was back in the middle of the pandemic, and everybody was going nuts on their offers. And there you go. Appreciation was above normal for a couple of years there, and that's why prices are so dadgum high today. So now if we look at June of 25, we're up to $444,800, or $900 call it. And again, that is more than 100%. That'd be about 115% increase from the 200,000 we had back in 2016. Prices have gone absolutely insane over the past several years, but inflation on everything has gone insane as far as that goes, so it's not just housing. But the price has definitely gone up, and frankly, I'd like to see everything cool off. Typical appreciation rate for homes is around 4 to 5% a year. Frankly, I'd be happy if it dropped to 2 or 3% per year for the next 3 or 4 years. But time will tell. And on that subject, so I know I said that I was going to finish up about 2 sections ago, but I just keep thinking of things to add to this. And I do want to look at the entire United States as a whole. On this, we'll see that the average appreciation over the last 45 years since 1980 has been 4.65%. And the highest year, they're calling it the best, I don't know if I'd define it as the best, depends on, I guess, your point of view, was just under 19% in 2021. And the worst year, and yeah, we can all agree that was the worst year, was 2008, and that was minus 12%. We see here, for most of this time, we're popping right along the average, 6-7%. There in 87, we got up to 12.5%. Then we had a couple of years of a little bit of decline, 0.7% down, and that looks like about maybe 0.1 down. And then coming back on the positive side there a little bit through the late 90s, and even 99 were 7.7%. But now we stayed in that range for about 4 years there. And then in 04 and 05, we were up around over 13% on both of those years. And the thing that was happening there is that was some freewheeling time when the government was giving out loans to anybody that had a pulse. They had these so-called no-doc loans, no documentation required. If you said you made $100,000 a year, you made $100,000 a year, and all of a sudden you qualified for a mortgage. As a result, the number of foreclosures started to go up dramatically. And that resulted in a lot of homes coming on the market. And you see 06 here, we're down to 1.7%. And then in 07, we dropped 5.4. And then 08 was the big year, down 12%. And then 9, 10, and 11, we were around 4% negative. And then we started coming back up in 2012. And then, of course, we're bouncing along the average again. And the average is what we really want to stay at. And then in 2020 and 2021, during the COVID years, you can see things went absolutely nuts there, up to 18.9% in 2021. 2020 was 10.4%. Now last year, 2025 was only 1.1% positive. And as I say, I'd personally like to see it range around 1 to 3% for the next 3 or 4 years. Let things get back into balance with the rest of the economy a little bit. That would be good. So now I do have those same numbers here for Knoxville. And if we look at that, the 40-year average is 4.34%. Best year was 23.1. Worst year was only 2.4. And we'll see the reason for that is here in 05 and 06, although it bumped up a little bit, we did not go nuts like the rest of the country. I've got a friend down in Florida that was just begging me to buy some property down there because he said, and I quote, "It's going up 25% a year." And I said, it cannot continue to go up at 25% per year. Now, it just so happens this friend of mine purchased a home in 07 at pretty much the peak of the market. Or was it 07 or 06 he bought that home? I forget. Anyway, may have been 07. But in any case, he bought his home for $800,000. It's in Jupiter, Florida, a nice home. And after the crash in 08, he was suddenly worth $600,000. I told him just keep paying the mortgage, hang in there, and he did that. And the last time I looked was actually a couple of years ago. The last time I looked, he was at $1.3 million estimated value in his home. So my point being, we may have a little bump in the road here and there, but just hang in there and it will recover. We just hope it doesn't go crazy with stuff like 2022 here, going up 23% in 1 year in Knoxville, Tennessee. That's just absolutely nuts. But we will look here at 2025. and we're 2.9% in 2025. So we're better than the national average there, again, for last year, and we're better for the last national average for the 12-month running average as well through May of this year. So that's about the size of it. I hope everybody found that both entertaining and enlightening. As I say, we're in a pretty good position here in Knoxville. We are in a balanced market. We've got good growth, better than the national average, certainly not as high as some of the places around the country. As I say, I think slow and steady is the way to do it. If you have any questions about real estate, whether or not you're in the market to actually buy or sell, if you're just curious, drop me an email or send me a text, and I'll do my best to get back to you and answer it for you. So thanks a lot, and I'll see you in the next one.